Bitcoin. Once you understand what makes a network valuable, these things are much easier.
I think people should stop worrying so much about this price drawdowns. If you understand what Bitcoin is, when the price goes down, it means you get to buy more Bitcoin. It's a gift.
We had the largest Bitcoin sell-off in 2025. In the last 24 hours, 80,000 Bitcoin were sold at a loss in exchanges.
When this cycle peaks, a lot of people have PTSD from 2021 because the business cycle and liquidity peaked in March.
The 60% probability is we have kind of a very traditional cycle, and that pushes, Bitcoin up to the 200,000 range and, all the other assets accordingly where they are on the risk curve. There's a 20% chance this early start is signifying something much bigger, which is the larger adoption and the more capital into the space, which leads to larger price rises than people expect.
Raoul Pal emphasizes that understanding Bitcoin's value is crucial, and price drops should be seen as opportunities to buy more. He predicts that Bitcoin could reach up to $200,000, with a 20% chance of even higher growth due to increasing adoption and institutional investment. Despite the economic uncertainty, Pal is highly optimistic about Bitcoin and the broader crypto market. He believes that Bitcoin's role in the global financial system is growing, with more institutions like BlackRock investing, which will push prices higher. Pal also stresses that the ongoing adoption of Bitcoin signals a major shift in the financial ecosystem. By mid-2025, he expects Bitcoin to experience significant price surges as it becomes a hedge against inflation and fiat system instability.
2020 was that massive fall in the business cycle, massive stimulus. It was just a completely squashed cycle. Now, if I look at the business cycle, the ISM survey is still below 50. We've barely started going up. So it feels that the probability is this cycle plays into the end of the year. And that's a tail risk. I think the market's going to struggle with this. If I'm right, Bitcoin, all of those. Once you understand what makes a network valuable, these things are much easier. People are going to get out of risk too early, and they're going to be forced back in at the end, and you get that 2017 final explosion. That's kind of my working hypothesis now. Yeah, we got two economies, and people can't see it. One is driven by liquidity, which is the tech stocks, and all the others live off debt and earnings. And if you ask the average business across anywhere in the United States, they're not seeing a boom time yet because the ISM survey is below 50. So we've got two different forms of economic growth, and half of the growth that we got right now is the tax and other stuff that's happening. So it'll work its way out. The economy will slow down. The Fed will get more aggressive is my general view. So given this, we broadly agree, and again, we don't have a crystal ball, but we broadly agree. So let's talk about asset allocation at top level. From my perspective, as the ISM survey picks up, in fact, when it crosses 50, is pretty much the perfect signal for alt season. So the US is going to agree to weaken the dollar in exchange for whatever Trump's going to exchange for. And there's a whole Taiwan trade to be done in this as well. But the point being is, this is almost identical to 2017 when Trump came in. Right? Trump came in at the beginning of the year, said the dollar's too strong because the dollar had been ripping on the tariffs idea. Rates have been going up. Trump said the dollar's too strong. China were in the same situation. And the moment the dollar weakened, China carried all of global liquidity. In 2017, the Fed were raising rates. USM2 was going down. And they were doing QT. So ordinarily, most people who would look at the market and say, well, that's a terrible market, risk assets are going down. But no, China just dwarfed everybody by hitting the print button. And I think it's going to be the same thing. So I think the Fed have much more cover than people understand. Again, people have PTSD from last time. They stick up the chart of inflation versus the 70s and say, see, this is going to happen all over again. I'm like, no, it's not. It's not even close.
Raoul Pal emphasizes Bitcoin's potential, viewing price dips as chances to invest and forecasting a rise to $200,000 this cycle, driven by adoption and liquidity. He highlights Bitcoin's growing role in the financial system, with institutional interest, like BlackRock's, paving the way for exponential growth by 2025.
The business cycles have been almost like clockwork, 2-year up cycles, 1 year peaking, 1 year down. And that corresponds. What's amazing is the Bitcoin halving cycle is the same as the debt refi cycle, which is, I think, what drives everything. it's the same as the election cycle. They're all the same thing. So, if that continues to repeat, then it should go until 2026 when that should be a bear market year. But, let's see. So I am obviously very bullish. I don't know. And I was talking to Nova about this yesterday. I've got three outcomes in my head that I'm juggling with. The 60% probability is we have kind of a very traditional cycle, and that pushes, Bitcoin up to the 100,000 to 200,000 range, and, all the other assets accordingly where they are on the risk curve. There's a 20% chance this early start is signifying something much bigger, which is the larger adoption and the more capital into the space, which leads to larger price rises than people expect, because people are quite scarred because the last cycle seemed shorter than most people expected. Everyone thought there was another final leg higher, and that never really happened. The kind of 100,000 Bitcoin, the laser eyes idea never got there. But maybe this time the shock is for excess returns beyond expectations. The other side that I grapple with as well is, well, maybe the whole cycle's front-loaded, and in fact it's shorter, but more violent in 2024. So those are the three scenarios that I'm juggling in my head with, but 60% probability is just does what it says on the tin and repeats what it usually does. For retail, it's just price action, and what's likely to happen is the moment the Bitcoin ETF is launched, the market will focus on front-running the ETH ETF. If the previous front-running made money, they'll do it again. So retail will get very interested, and ETH's a broad, deep ecosystem, and people are happy to get exposure to it. The institutions, it depends whether they give the yield of ETH in the ETF or not. If not, a lot of the institutions would prefer to own ETH itself, because then they can stake it and get yield. Because if you don't give them yield, some asset manager who launches the ETF's going to get rich. BlackRock, they'll make all the money because they'll get the ETH staking yield, and they don't give it to the ETF holder. And we've seen that very commonly in ETFs in the past. So I think that's the thing, because when I speak to institutions, they get ETH because it's just like, here's a bet on technology. It's a broader based thing, and we get a yield, so we can just sit on it, which they don't get with Bitcoin, but they understand the Bitcoin story as well. So they understand there's two different things here at play.
Raoul Pal highlights Bitcoin's potential to reach new highs, driven by growing adoption and institutional interest. He sees price drops as opportunities, emphasizing that liquidity and network growth are key to its value. With major players like BlackRock entering, Pal predicts a $200,000 target this cycle, signaling a shift in the financial system. He also notes parallels between Bitcoin's cycles and economic trends, suggesting cryptocurrencies will play a crucial role amid inflation and monetary challenges. Pal believes this marks a pivotal moment for investors as crypto adoption accelerates globally. Will Bitcoin hit $200,000 this cycle as predicted? What impact will institutional adoption have on crypto's future?